Rob, Livetiles, headquartered in America. It's a tech business, global software company, providing corporates and governments solutions using AI to better manage their workplace. So it's a workplace management software, isn't it? Based in New York, but listed here in Australia.
Yeah, look, it's a really exciting business. They deal with the intranet, video conferencing, CRM management. It's the type of business that is set up to succeed in COVID-19 environment and post environment. Unfortunately, what we're seeing is that their average recurring revenue, whilst up significantly on a 12-month basis, has actually started to flatten out from quarter on quarter over the last 12 months. So a little company like this starting up, you want to see this exponential growth in revenue, and we just haven't seen that happen. Where we're seeing cash burn coming in about 8-9 million a quarter. They've only got cash on hand of about 33 million. And so that leads us to the position that they're likely to do another capital raising within the next 12 months. So that's going to be dilutionary to all the shareholders. So we like the potential. They just haven't seemed to deliver on that potential. So if we've got it in portfolios, we're probably going to lighten it.
Okay, all right. Because as you say, is it a sort of not warning bell, but something for you to consider, as you say, in this environment where corporates around the world and governments are having to manage their staff working from home and remote locations. The very basis of this platform is how you communicate with them and how do you stay together. And if it's flattening out, you wonder, well, if you can't increase market share here or revenues, it's going to be hard where we get back to normal.
You couldn't ask for a better environment for that business. So that's the concerning part of it.
Right, okay. Andrew, have you had a look at Livetiles?
I have, and I don't want to show our hand too much on the next one, but just this comment we're currently having, I mean, the next company is certainly taking far more advantage of what's going on than what these guys and girls are. So I guess the thing that sort of worries me a little bit about this one is that it's too small. It's 200 million. I mean, look, 200 million is a lot of money. I'm not suggesting it's not, but, the opening question was around CommBank at $124 billion. So, it's quite a small company, this one. It's down 45% for the year. There's probably a lack of corporate appeal as well, because the chair and the CEO collectively own about 23% of the company. And if I'm in this sort of tech space, and I know I'm not comparing apples with apples, but why wouldn't I buy like an Altium or something? It's got 28% return on equity, 16% earnings growth. Livetiles has got a minus 76% return on equity. So as Rob's saying, they're going to have to go and tap shareholders for more money, that dilution thing that he was talking about. So, interesting business, albeit SharePoint integration, if you think that's interesting. But look, I'm a pass.
Right. Okay. All right.
3 for 3.
Yeah. What about Whispir? Those suggested by Sally, Andrew. Again, tech business, cloud-based communication, where it brings, if you like, all of your email, text messaging, web chats together. If you're a corporate, their customers include BHP, Rio, Telstra, Foxtel, Australia Post, and Qantas, and a lot of other government agencies as well. It sounds like Whispir is sort of in that same segment of the market, Andrew.
Yeah, and I guess that's what I was saying with Livetiles. Whispir are actually delivering. I mean, they've got that quality client base, as you said, the AGLs, the Foxtels of the world, etc. Floated back in June last year at $1.60. So even despite the pandemic, the share price has been going along pretty well. And the key thing, to Rob's point, is that recurring income base is increasing. It's up about 23% on the previous corresponding period, beating prospectus forecast, which again, in this environment, you'd expect them to do, but that's great to see. CEO has skin in the game. He owns about 15% of the company. So, look, out of all the ones, I'm going to go buy on this one. We've got 3 no's.
Okay. All right.
Get your notepad out. This is a buy.
But look at that 1 year chart. $3.36.
I'd much rather be buying on the chart on the way up, Koshy. I don't want to be trying to catch that falling knife. You want it on, and I mean, not that I'm suggesting you buy Afterpay for a moment. It's a poor example, but you know, if you'd sat there at $30 and that Afterpay chart's doing this and going, oh, I can't do it because it's $30, well, we know where it is today.
Yeah.
So share price going up should not be a hindrance or a barrier to you buying a share. If anything, it's telling you the market likes it. You should be looking at this.
Yeah, following the trend. Rob, what do you think of Whispir?
Yeah, look, let's go four from four. I think Andrew and I are reading from the same page on this one. Whispir looks really good. Gross margin, 62%. Again, comparing it back to Livetiles, these guys have actually seen revenue increase of 27%, whilst operating expenditures only up 9%.
Right.
Much more stable customer base. A lot of those large companies you mentioned, you can throw in McDonald's and Coca-Cola in there as well. Predominantly they're government contracts that they're running as well, so very large contracts, very long term. Governments aren't making that quick decision to change from one year to the next. So the actual business model is a low-code, no-code platform built for people who don't have IT coding skills.
Right.
And through moving widgets to create a flow chart, you actually create your own app and software that can greatly reduce your operating costs and streamline your business models. So what's exciting about it is that the low-code, no-code platform is expected to be, that market's going to be about $15 billion this year. And there's assessment to say that the low-code, no-code platform will be about 65% of all application developments by 2024.
Wow. So they're actually riding a cutting-edge technology, the new norm in terms of technology, but a bit ahead of it.
Yep.
As we saw on the 5-year chart there, it's only been going a year,
yep.
18 months.
Mm-hmm.
How do you assess the management of a business like that? That must be the tricky bit, because you get all these tech companies coming on, and medtechs would be exactly the same as well. We have lots of platform businesses on the market at the moment. What's the process you go through in terms of just finding out whether they can deliver?
Shareholder engagement, being open to tell us what the business is doing, particularly through these times. People want clarity. People don't want to not know. There's another great company out there called Tyro Payments that are coming back to the marketplace every single week, showing us what their results are. Whispir are the same, constantly telling us how far ahead they are of the prospectus numbers that they put out there in the beginning. And the business makes sense, it's the right place to be, and they're delivering. Like the Livetiles, they're actually delivering well, we like it.
Yeah. Andrew, how do you assess, because you usually sort of wait for companies to settle down for 2 or 3 years to see if they deliver on their prospectuses and the like. How do you assess management for a new stock?
Yeah, but part of it, Koshi, I think is also around who the management is, what's their pedigree, for the want of a better term. So if you sort of, and I'll use Andrew Forrest as an example, he didn't have a great start in corporate land with Anaconda. And a few people said, well, after what happened there, I'm not inclined to support Fortescue, to their peril, given where Fortescue's share price is today. But certainly, if you don't have a track record as such, or the business, it's hard to get a read on. Sure, you've got to read the prospectus or the PDS, but it's also around who's involved in the business. I mean, when we started the discussion, we said, well, who are some of their customers? And we're talking about blue chip customers like AGL, like Foxtel, like Qantas, etc. So those companies in themselves would have done that due diligence. You'd also be maybe talking to their competitors, trying to get a bit of a read on that as well, from a broader industry perspective as well. So you stick all that in the melting pot, and then, as Rob's saying, you're paying close attention to that communications piece. And I agree, companies like Tyro are sort of the gold standard, where there's others that you may not have heard from them since February, and you're saying, well, hang on, we're in the middle of a 1 in 100 year health emergency. Wouldn't you think, maybe some information might be helpful? So yeah, it's a multitude of things.
Yeah, that's really good, and good advice from both of you for us mug investors out there on how professionals actually think about these companies. It's really important.